So why did I buy Ethereum? Before we get started, remember none of this is financial advice and you should do your own research. I'm just showing you how I do it for myself and my copiers on my portfolio. So today we're talking about the Ethereum Trust and why I bought more Ethereum to put into our portfolio. Hi, my name is Zach and welcome to the channel. If this is your first time here, welcome. Here, I want to help you manage your money by showing you how I do it for myself as well as my other copiers who I help on eToro. Currently have about 9,000 copiers and about $17 million. So having said that, let's get into it. So just over the weekend, I actually put 1% more of our portfolio into Ethereum. So 1% of 17 million roughly translates to about $170,000. So the question is, am I confident or am I bullish on Ethereum? So just really quickly, what is Ethereum? So Ethereum is a blockchain protocol that's one, proof of stake, two, it allows for you to build smart contracts on top of it so that you can programmatically execute certain things. Bitcoin can do this, however, it wasn't designed to do this, so it can be a bit expensive. Ethereum also can be really expensive depending on the time, how congested the network is and things like that. But there are scaling solutions that are coming on, such as Arbitrum, Optimism, Polygon, of course. And all this is to help Ethereum perform many transactions per second. So for some of you, you may not know this, but I do love all EVM chains. I do love building on EVM. And I am an ETH maxi, meaning I only like EVM-based stuff. I don't code on other chains because one, I don't know how to. Two, I think it's too difficult of a learning curve. Three, I don't see why when there's so much infrastructure already built on EVMs, and you see all the white papers coming out for CBDCs, and they're all Ethereum based. So why would I want to learn a different language? It's hard for me right now, especially given, we have time constraints. So of course the main news coming out of Ethereum is the approval of the ETF, which came out on May 23rd. And it's somewhat of a surprise. No one was really expecting the approval to come. So probabilities went from like 25 to 75% that the ETF would be approved. And what this did is it caused a rally in Ethereum. But since the announcement has been made, Ethereum has remained rather flat. So this article covers it perfectly. It's May 24th, Ethereum ETF is approved, so why aren't we rich yet? And as I mentioned just now, it already surged over the past week when there was somewhat of a guidance towards this ETF approvals. So one of the reasons is this is at S19. So one of the reasons is this is only at 19B-4S approval and not a S1S approval. Okay, I'm getting confused by these names. But anyway, it means that there's certain rules that need to be put in place before trading can begin. And this is of course expected to be somewhere around June or July. As you can see from the price of Ethereum, we did have this pop off here, which was of course the rumors about the ETF approval coming out. So it's from 3,000 to 3,007, 3,008, so about 20% rally. And since the announcement, we've remained rather flat around this amount. However, something that's interesting, if you look at the futures pricing, so currently we're trading around 3,814. This is a futures contract of the quarterly September 27th. So this is on Binance on September. So what a futures contract is a promise to deliver at a agreed upon price. So if I were to buy this contract now, it's slightly higher than the current price. So why would they do this? This is because they expect Ethereum to be priced slightly higher than it is today. But this is of course not indicative of future prices, but it's just an indication. It's just an indication that the market is bullish in general. If this price was lower or somewhat the same, then I would be a little bit more concerned because it shows that the market is slightly bearish. Now, another thing that I've subscribed to is this 10x research. It's a fantastic resource if you guys have time to check it out. But what I wanted to focus on was 0.7. So we expect this Ethereum spot ETF to start trading soon, and we expect ETH prices to rise into the actual date. So that becomes interesting. Look at 0.8 as well. Open interest increased by $4 billion versus Bitcoin just 3%. So 45% versus 3%. So what it's saying by open interest is the amount of open contracts there are. So these open contracts are basically derivatives on Ethereum. There are financial products on Ethereum. And if the number is higher, it means that a lot more people are interested and are long or short on these contracts, which means, there's more hype, there's more excitement, there's more velocity if this were to take off. So given there's this much expectation in the market, we do want to be long. However, having said that, open interest can change overnight. People can suddenly close their positions, something called forced liquidations, which means the price drops suddenly, everyone's forced to liquidate, and the open positions can come down. There are a lot of factors that could happen that could drive the price of Bitcoin down. So what we've done is we added Ethereum, but remember, because of the size of our portfolio, we actually only added 1%. So if you go to a portfolio, we have a lot of different bets. Ethereum sits at 2.46, 3.46% up from 2.46 over the weekend. And we still have a couple of Bitcoin plays right here, so 2%. And of course, Matic is really, really small. So altogether, we have about 5-6% maybe of exposure into crypto at the moment among our entire portfolio. So the question is, why only such a small portion? Am I not confident in the future of financial or blockchain as a whole? Don't get me wrong, I love blockchain. However, what we want to do in our portfolio is make money over a very long period of time. And we do need to remember that we want to remove luck and timing as much as possible, because these are very hard to control for. So if you look at our stats, in 2020 and 2021, we benefited a lot from the crypto bull run and of course the stock market bull run. In 2022, however, we took a small drawdown, which means that we lost a bit of money, but it wasn't as major as the other crypto investors on the platform or Bitcoin itself, which dropped a lot more. We're talking about 80% off from highs to lows. And we didn't experience that volatility because we made a lot of different diversified bets. Before we get to that point, real quick, if you want to check out my portfolio or you want to try eToro for yourself with a virtual account, you can in the description below. The sign up links are right below. So for me, I do want to play this rally because I think there's going to be some momentum behind it. But at the same time, I'm not betting everything on it because it's not a super high conviction trade. Instead, we think there's a good probability, but we don't know. So we just risk manage accordingly so that we manage to smooth out results over a long period of time. Now, I know there's some of you who prefer to go big or go home, like either make 500% or make nothing. And that's absolutely fine, it's your money. This is at the end of the day not financial advice, and you're free to do whatever you want. However, again, I really hate market timing and I really hate luck, because these are things, again, I cannot control for, and it's not representative of the amount of work that you put in. So for me, I'd rather produce consistent results over a long period of time. But again, it's up to you. And overall, I'm happy with the way that I'm positioning my portfolio into this potential bull run.